Does your international business do transactions overseas that you need to account for? Well, then you need to know how to use the multi-currency feature in QuickBooks Online. We all know that dealing with exchange rates can be confusing and difficult, and accounting for converting currencies and paying fees can sometimes be a nightmare. That's why all you have to do is watch this video and you will have everything you need regarding converting currencies and managing multiple currencies in QuickBooks Online. My name is Mark Smolin. I'm the founder and CEO of Worldwide QuickBooks. I personally guarantee you the clearest possible explanation for every topic that you could possibly need to use QuickBooks Online to manage your multi-currency transactions. If you watch a little bit of this video every day and follow step by step exactly as you see, you will be an expert in multi-currency transactions using QuickBooks Online, and you will totally have control over the multi-currency feature when using it. And if that's not enough, I answer all questions immediately, so you have the benefit of a live teacher if you have any questions about what you see in the videos. All you have to do is leave your questions in the comment section below, and I will do my best to help you. All of this is right here on YouTube, and it's free, free, free. First, let's make sure that we all understand the ideas of multi-currency. Sometimes we must pay or get paid in more than one currency. The currency of the country that the business is registered in is called the home currency. Most transactions will be in the home currency for most businesses. When QuickBooks displays the results of transactions in another non-home currency, the resulting numbers are displayed in the home currency. That means the equivalent amount in the home currency is what QuickBooks will display. For example, let's imagine that 200 Guyana dollars are equal to 1 US dollar. Then we record receiving 2,000 Guyana dollars. QuickBooks will display $10 as the amount of the transaction and add or subtract $10 to the accounts to record that transaction and adjust the account balance by that amount. If it was 2,000 Guyana dollars earned as income, then the income account would increase by 10 US dollars. If it was paid as a delivery expense, for example, delivery expense, it would lower the bank account by $10 and increase the delivery expense balance by $10 and so on. So what's the problem? The problem is that the dollar changes in relation to all these other currencies on a daily basis. And that means that if the dollar goes up and the other currency goes down, and vice versa, we have a question about how to measure the amount of the other currency that we have. This becomes an issue if we receive the other currency on one day and then transfer or pay that currency on another day. On the day that we pay that currency, there will be a different value of the currency from the day that we received the currency. To understand this, let's stay with our example. Let's imagine that the day that we receive the 2,000 Guyana dollars, they were worth $10 in US currency. Then let's imagine on the day that we pay them to a vendor for a service, these same Guyana dollars are only worth 9 US dollars at the later date, the moment that we pay them for a service. Therefore, on the day that you pay out these Guyana dollars, assuming you pay all of them in one transaction, you have then lost $1 because of the constant changing of the exchange rates between the dollar and the other currency. There is always a gain or loss after the first multi-currency transaction, and there could be several consecutive transactions that follow from the first one. Watch this. If there's always a gain or loss after each consecutive transaction, the prior example only showed 2 transactions. But what about this? Let's imagine that we made an invoice for someone whom we performed a service for, and we charged them 2,000 Guyana dollars. And on the day that we performed the service and gave the invoice, those Guyana dollars were worth 10 US dollars. But then on a later date, they actually paid the money and we physically received the 2,000 Guyana dollars that we asked for. But on the day that we received the payment, those same 2,000 Guyana dollars were worth $11 in total instead of 10. What does that mean? It means you just gained $1 for holding and waiting for the money to be paid between the date you did the invoice and the date you got paid. But the story gets better. Let's imagine, because we're holding Guyana dollars that are worth 11 US dollars, we will now physically bring them to the bank on another day later in the future, and we deposit those 2,000 Guyana dollars on a later date. And let's imagine on the day that we deposit those Guyana dollars, they're not worth 11 anymore. They're now worth $12. Guess what? You just gained another dollar just for waiting to deposit the money. But now that the deposit recorded the Guyana dollars as equaling 12 US dollars, when we go to pay them to a vendor for services that the vendor accepts Guyana dollars for, on the day that we actually pay them, those same 2,000 Guyana dollars are only worth $9. What does that mean? It means you just lost $3 because you waited and held on to the Guyana dollars before paying. So how does QuickBooks handle this? Well, for each consecutive transaction with the non-home currency, QuickBooks will record the transaction in dollars at the rate of exchange at the moment the transaction happened. Each of these consecutive currency transactions will be recorded with an additional adjusting journal entry that QuickBooks will make automatically to record the gain or loss from the difference in the exchange rate between the prior transaction and the current transaction. Gain or loss on currency exchange is an account in the chart of accounts that QuickBooks will create at the moment that you activate the multi-currency feature in QuickBooks. When it displays this account in the reports, exchange gain or loss will show up below the net operating income or the net ordinary income, and it will be in the lower section of the profit and loss for other gains and losses. This is because a currency gain or loss has nothing to do with your normal operations and should not affect your net ordinary income even though it physically affects your bottom line. There's a lot to know when using multi-currency. Transactions that are converted at the moment of the transaction are recorded differently than transactions physically made by receiving, paying, or transferring the other currency. And this video playlist series course is going to address both of these issues one idea at a time.
Chapter 3. Set up to follow step by step.
You only need very basic knowledge of QuickBooks Online to enjoy this course and learn well. You should have some small experience entering QuickBooks Online transactions. Doing the basic setup on your own will remind you of the minimum you need to know to be able to do this course. So, after you create a separate QuickBooks Online account specifically for this course, all you have to do is add these 6 accounts to the chart of accounts that you already have. Some accounts might already be there, but make sure that the detail type is the same as you see here. These are the 3 customers that you should put in to set up your QuickBooks Online account to be able to match numbers for this course. You don't have to put in anything but their name because their address and their other information will not be relevant for the course. Here are the list of vendors that you should input to set up your QuickBooks Online account for this course. And again, you don't have to put their addresses, you just have to put their names. Now, these are the 2 items on the list of products and services that you have to put in order to set up your QuickBooks Online account for the course. And when you create these items, you should attach these items to the income accounts with the same name. You see, this way you'll know which accounts to connect them to, and you'll be able to do the setup transactions. Now, I think it's important to start the course having already had some numbers and some transactions in the QuickBooks Online account. Because if you are activating the multi-currency feature in QuickBooks Online, you probably already have a good number of transactions with the US dollar. So if you could pause the video and record these 13 transactions, it will accomplish 2 things. It will set the stage for a more realistic experience using the QuickBooks Online multi-currency feature, and it will also help remind you of the basic type of transactions that you need to know how to enter in order to be able to do this course. So take your time and record these 13 transactions, and if you recorded all of them properly, you should finish with this trial balance. And this trial balance will be the starting numbers in the very next video when we start recording transactions with multi-currency. Actually, the 2 videos that follow this one are additional setup videos, and then there are 2 videos that show you how you might be able to get your other QuickBooks Online account for free. I cannot promise that you will get the QuickBooks Online account for free, but at least watch the videos and try. And if you don't get a free QuickBooks Online account, you can still learn by watching the videos and applying it to your situation. I thank you very much, and I will see you in the next video.
Chapter 4. Activating the multi-currency feature.
Before you can record transactions with more than one currency, you must activate the multi-currency feature in QuickBooks Online. This means opening the account settings window and clicking one box just to turn it on. But what will happen in the QuickBooks Online account after the multi-currency feature is activated? Well, here are the changes that you will see. First, you will notice that a new main menu choice is added to manage the multi-currency feature when you click in the cogwheel. And if you click the currency, you will see that you now have a new list called the multi-currency list, or rather currency list, that actually tells you the active currencies and allows you to add new currencies that you are now doing business with. You will also notice that there are a new set of 2 reports that have been added to your set of reports in QuickBooks Online after you activate the multi-currency feature. And of course, a new set of data fields are shown added to transaction windows to show the effects of the multi-currency feature. So let's take a look at how to add this in QuickBooks Online. So let's activate the multi-currency feature in your new account. When you click the cogwheel in the top right, you see that there is no currency choice here. But if you click Account and Settings and go to the left panel and click the Advanced category, then scroll down to where it says Currencies. Then click the pencil tool to be able to edit the section. Then when you click the box to activate the multi-currency feature, you have to click another box that asserts that you understand that in this QuickBooks Online account, once you activate the feature, you cannot turn it off, and all the changes to the accounts that we just discussed will be permanent in this account. Click Save. And now let's take a look at the results. Click Done and click, okay. Let's see. If you click the cog wheel, you now see that you have a currency list as one of the list choices, and it has just been added to your QuickBooks Online account. If you double click, you can see that by default, we have the home currency as the US dollar, and we have only 2 out of several currencies activated, the most common and the most likely alternative currencies that an American would use. But of course, if we need to add more currencies, we can click right here. You will also notice that if you click Reports, Standard, and scroll down to Business Overview, 2 reports have been added to this account: Realized Exchange Gains and Losses and Unrealized Exchange Gains and Losses. These 2 reports were not here before we activated the currency or multi-currency in the account settings window. And the last change is if you click New and you open any transaction window, you will notice that there is now a column to declare what currency you are using for the transaction. So these are the changes to your QuickBooks Online account after activating the QuickBooks Online multi-currency feature.
Chapter 5. Adding overseas customers and vendors.
You can add an additional currency from the currency list by clicking the pull-down menu choice and scrolling to the specific currency that you would like to add to the list. The value will be whatever the exchange rate is at the moment of activation. So, if we now add Russian rubles, we can take a look at what the exchange rate is at the moment that we add. From the top right, we click the cog wheel and then we click Currencies. Now, here are the default currencies that are already activated, and then we click Add Currency. Now, we get the pull-down list of all the currencies that we want to activate. So let's scroll down to the letter R. They're in alphabetical order from the English alphabet. L, M, N, O, P, Q, R, ruble, Russian ruble. Here we go. And we click Add. And now Russian ruble has been added to the list of currencies. Now let's add the Guyana dollar to our currency list. Click Add Currency, and then it's down by G, alphabetical order. In regard to the English alphabet, it's GYD, Guyana dollar. Click Add, and now they are on the currency list. And if you want to see what the unit value of each of the currencies are at the moment that you activated the currency, you would click Edit Currency Exchange. So if I click that for the Guyana dollar, right now on February 7th, 2021, the rate that would be downloaded if we use this rate is 0.004781 of the US dollar. And we'll talk about changing the rates later. Same thing with Russian ruble. Exchange rate, right now, at the moment we activated the Russian ruble, the exchange rate was 0.013401 of the US dollar as of February 7th. And now that we've added the currencies to the currency list, we must add each currency to the appropriate customer data. For each customer you add to QuickBooks Online, you must tell QuickBooks Online which currency that customer will pay you with. Only customers who pay you with active currencies, that means currencies that we just put on the list, will be able to be saved in the customer list. Simply choose the currency when you first input the new customer. So, you must remember that you can only have one currency per customer, literally, and if you have that rare situation where one customer pays you in different currencies, you may need to add a customer twice. But we might not have to do that. Let's add Henry Goodman. He pays us in Guyana dollars, so he's Henry Goodman from Guyana. Watch how we add him. We click Sales, then we click Customers, then we click New Customer. Now his name is Henry Goodman, and the way to determine his currency is to click the tab Payment and Billing, and you can see this customer pays me with, and we click the pull down arrow, and right here on the top are the active currencies that we activated from the list. And we click Guyana dollar, and then we click Save. Now let's add Yuri Buri from Russia, and he pays us in Russian rubles. So we click Sales, Customers, New Customer, but to make sure we add his currency, we click the Payment and Billing tab. Customer pays me with Russian ruble, right here. Save. Now we can check to see if we are able to make transactions in the appropriate currency. If we click New and we click Invoice, look what happens if we choose Yuri, the customer who pays us in rubles. You see that the ruble is indicated here, And even though this stupid thing is stuck on my screen because it doesn't work, here it is. Okay, you can see that rubles automatically come up when I choose the customer who pays us in rubles. However, if I choose the customer who pays us in Guyana dollars, you can see that Guyana dollars is what comes up in the currency exchange conversion rate box. And adding the currency information to the vendor data is almost exactly like adding it to the customer data. For each vendor you add to QuickBooks Online, you must tell QuickBooks which currency that you will pay them with. Only vendors whom you pay with active currencies, which are currencies that we just put on the list, will be able to be saved in the vendors list. Simply choose the currency when you first input the new vendor. Remember, it's one currency per vendor, so if you have that rare situation where you have one vendor that you for some reason need to pay in two different currencies, you might need to add the vendor twice. So let's add Gina Casina for her delivery services from Guyana, and we pay her in the Guyana dollar. Very simple. We click Leave without saving, yes. We click Expenses, Vendors, New Vendor. Now, her name will be Gina, oh, let's scroll up here, sorry, Gina Casina. And the currency that we pay Gina with is the Guyana dollar. Notice it's in the activated section on top, Guyana dollar. So we click Save. Now, let's add Yelena Mitrofena from Russia, and we pay her in Russian rubles for delivery service. No problem. We click New Vendor, and the name was Yelena Mitrofena. And if we scroll down, you can see that we can choose to pay her in Russian rubles. And we click Save. Now we know that this is active when we go to pay, because if we click New and we click Expense, if we choose, if we choose Gina Casina, you can see that the Guyana dollar is what we are paying her in. And if we choose, where is she? We choose Yelena Mitrofena, you can see Russian rubles is what we need to pay her in. And those are the changes you need to make. And now we are finally ready for our first multi-currency transaction.
Chapter 6. Receiving Payment in Foreign Currencies.
Sometimes we have customers that require that we bill them in their own currency for some product or service that we provide. We can invoice or bill the client in any currency that we have activated and assigned to that customer. They can pay from pay platforms like PayPal that can convert their currency to dollars. So there are really two kinds of multi-currency transactions. They're the kinds of transactions that are converted to or from the home currency at the moment of the transaction. And then there's the kind of transaction where we physically pay or receive the other currency. Now, this video and the video that follows will focus on this kind, the type of transaction that gets converted before we pay it or before we receive it. And in this example, there is no fee to transfer the currencies or to exchange the currencies. Before we receive payment, we will see how to handle the fee in the next video following this one. If it is your first time billing in another currency, QuickBooks Online already remembers what the current exchange rate is because it updates the exchange rate every time you log in. You can check this from the currency list for all active currencies. So if we went here and clicked the cog wheel and came over to list currencies, you can see that we can look at the Russian ruble and we can click right here and we can see what the currently downloaded exchange rate was at the moment that we logged into QuickBooks Online today. And then it's telling us the rate because this is the day that I'm recording this video. So as of this date, this is the exchange rate between the dollar and the ruble. And of course, you can change it if you want to in here, but you don't have to because you can anyway change it at the moment that you record a transaction. And now let's do our example. Let's imagine on January 11th of 2021, we did legal services for Yuri Buri and we must bill him in rubles. He agreed to pay 10,000 rubles in the future for the service that we gave him today. First, we download the exchange rates for the very first time. Then, we will send him an invoice for 10,000 rubles, not dollars. QuickBooks will create a new account receivable type of account just to show the dollar equivalent of how much we are owed in rubles at the moment of the first transaction that we have with rubles. So how much will that be in US dollars? Well, we just downloaded the exchange rates and we saw that on the list $1 equals 0.01337 rubles. 10,000 rubles times 0.01337 means the dollar equivalent of the service that we are billing him for is $133.70. So what will be the result? Well, we just earned $133.70 more worth of income from legal fees. So income from legal fees will increase to $27,133.70. And of course, because this is our first transaction with rubles and we are owed a foreign currency, QuickBooks automatically creates a new account receivable account just to show how much is owed in rubles. And the dollar amount that is owed to us in rubles is $133.70. And that's what the trial balance will look like after we record this first invoice. From the top left, we click New Invoice. The date is January 11th of 2021, and the customer is the one that accepts Russian rubles, Yuri Buri. Now, it's not exactly at the rate that we said a moment ago, but I'm just going to show you that you can change it at the moment that you record the transaction. And it actually asks you if you want to change it for all future transactions. I'm just going to leave it for this transaction only. But it doesn't matter because each transaction gives you the ability to change it. Clicking here would go back and change it on the list so that the list would remember that this is the exchange rate you want to use. But you don't have to. You can do it transaction by transaction because it changes every day. And we are charging for legal fees earned 10,000 rubles. And that's what we're charging, and then this person will owe us 10,000 rubles at this exchange rate. And that's the exchange rate that we predicted a moment ago. So at the moment we click Save and Close, we can then click Reports, Custom Reports, Trial Balance, and you can see that the results are exactly as what we expected. The income from legal services increased by $133.70, and for the very first time, accounts receivable in rubles showed up for the first time in the US dollar equivalent of $133.70. So what happens on the day that we get paid for the invoice? Well, the day we get paid, the rubles are worth a different amount from the rubles on the day that we created the invoice. We can either download the new exchange rate for the day we got paid, or we can input the exchange rate that we need it to be into the QuickBooks record at the moment we record receiving the money. Then QuickBooks will record the transaction normally, but add an adjusting journal entry for the difference in rate from the invoice date to the payment date. For example, let's imagine on January 15th, we received full payment from Yuri for the invoice from January 11th. If we received full payment, that means he paid us all of the 10,000 rubles that were on the invoice. The rubles were worth $0.01337 on the day we made the invoice. However, today, January 15th, those same rubles are now worth $0.014. So what's the gain? Well, the dollar was 0.01337 rubles on the day we made the invoice. Now, the day we get paid, the dollar is 0.014 rubles. The increase per ruble is $0.00063. And that gain goes for every single one of the 10,000 rubles. So if you multiply the gain times 10,000, that means the gain from exchange is $6.30. It's very easy to multiply times 10,000. Just move the decimal point over and you see if the gain was $0.00063 for each one, times 10,000, that's $6.30. Another way of looking at it is that the day we made the invoice, the rubles were worth $133.70. And then we held on to that invoice, and then the day we got paid, that day the rubles, those same 10,000 rubles, were then worth $140. So you just gained $6.30 just by waiting to get paid. And you may well ask, what will be the result in the trial balance when we get paid from Yuri? Well, we no longer have accounts receivable in rubles because in this example, Yuri is paying all of the 10,000 rubles that he owes us. So the Ruski account receivable for rubles goes down to zero. But the amount that's physically paid into the bank account is $140, the amount that it's worth at the moment we got paid. So our bank account increases by $140 and becomes $2,540. And the difference shows up at the bottom of the trial balance on the credit side. The gain on the currency exchange will be $6.30. From the top left, we click New, Receive Payment. The date was January 15th. The customer was the customer we have with rubles, Yuri. Now, we're physically depositing this money to the Chase bank account under the assumption that the rubles will be immediately converted and deposited into our bank account. But the most important thing to take note of is this rate. On the day that we physically got paid, the rate was 0.014 of the US dollar, and we're only changing it for this transaction. Now everything else will be in terms of rubles. We received 10,000 rubles. And of course, since they were converted into US dollars, that means our accounts in our QuickBooks will change by the US dollar equivalent, $140. And all 10,000 rubles were applied to the invoice for 10,000 rubles, so Yuri's balance will be 0. We click Save and Close, and when we go back to the trial balance, you can see that the bank account balance is exactly what we predicted, 2,540, because it increased by 140 US dollars. That's what we got paid in after it was converted on the day that he paid us. And now that we don't have any rubles in our account, we owed to us, we now have accounts receivable for rubles equaling 0. And the most important thing to look at is down here, the exchange gain or loss. For the very first time, we gained a certain amount of money because there was a difference between the value of the currency for the first transaction, the invoice, compared to the second transaction when we received payment for that invoice. And if you look at the profit and loss, you will see that you have net operating income, which is your normal operating income, and then the exchange gain or loss shows up below net operating income, but it still has an effect on your overall net income.
Chapter 7. Transfer exchange fees.
In this second example, the payment we receive from Yuri will be directly deposited into the bank account. However, if you need to deduct an exchange fee, you need to make an intermediate step. You need to record the full payment in the undeposited funds account. Then, with the same date, record the payment as deposited in the deposit window. That will give you the chance to deduct the fee. For example, let's imagine on January 25th, we did legal service for Yuri Buri, and we billed him for 10,000 rubles. Each ruble was $0.013 on this day, January 25th. On January 30th, he pays all 10,000 rubles. The ruble is only worth 0.012 of the dollar on that day. The loss is $10 on the exchange, just like we learned how to calculate in a prior video. And to add insult to injury, they also deducted a $20 fee for the currency exchange and the transfer of funds. So how do you handle this? Well, you would record the payment the same way that we learned in the prior video, except this time you would not choose bank account, you would instead choose undeposited funds. Then, immediately after recording the payment, you would open the deposit window and deduct the fee and record the net amount into your account. So first we record these two transactions. January 25th, we did legal service, 10,000 rubles, 0.013 for Yuri. From the top left, we click New, Invoice. The date is January 25th. The customer is Yuri, and the product and service is legal fees earned. The amount, 10,000 rubles. Now, the rate is very important. The rate is an even 0.013 at the moment we record this invoice. Now, we do not want to change it back on the currency list We want to change it only in this transaction, so we click OK, and then we click Save and Close. And as you can see, accounts receivable rubles shows up for the first time as $130, and income from legal services becomes exactly the number we expected. And now let's record the payment. On January 30, the ruble was only worth 0.012 of the dollar when we got paid all 10,000 rubles. So the loss on the exchange is $10 because we calculate it just like we learned in the prior video. So what will be the result after step 1? Just recording the payments into undeposited funds. Well, if they paid all 10,000 rubles, then accounts receivable rubles will go down to 0. And because they were worth 120 US dollars at the moment we received them, then undeposited funds will increase by $120 and become 2,120. And the difference is a $10 loss. Now, right now, we have a $6.30 gain. But if we put in a $10 loss against a $6.30 gain, we wind up with a net loss of $3.70. And these will be the numbers just after recording the first step of receiving the payment. From the top left, we click New, Receive Payment. The date we received the payment was January 30. We received from Yuri, and you can see he has his open invoice here, and the rate on the day we received the payment was 0.012. Now, click OK and scroll down. Now, of course, we are not going to use this. Even though the money has been directly deposited to Chase Bank, we have to do the intermediate step of recording it into undeposited funds. And that's because we will have to do a second step to subtract out the fee. So we acknowledge that we have received all of the 10,000 Russian rubles, but we received it in terms of US dollars, and because the day that we received it, it was at this rate, we are going to record in our QuickBooks records a change of $120 to the accounts that we discussed a moment ago. And that's how you record it. We then click Save and Close, and you can see the results after step 1 are exactly as what we expected. Chase Bank has increased to 2,540. And accounts receivable in rubles went down to 0. And you'll notice exchange gain or loss has moved from $6 on the credit side to $3.70 on the debit side. And now that we've recorded that, the very last step is to deduct out the fee and acknowledge that it actually went into the bank account. Now we're recording this deposit on the same date as the received payment, so the exchange rate will be the same. The financial institution deducted 10,000 rubles for the exchange to convert the currency to dollars and then transfer it into our Chase bank account. And the expense that they deducted, that we record for the 10,000 rubles, is an expense called exchange and transfer fees expense. And if you don't have it in your chart of accounts, you should pause the video and put it in your chart of accounts. So what will be the results after this next step? Well, the $120 will no longer be in undeposited funds. They will be moved to the bank account. So undeposited funds goes down to $2,000 and the bank account goes up to $2,648. And of course, the fee shows up as transfer fees expense in the US dollar equivalent of the 1,000 rubles that they deducted. And at this moment, that equivalent is $12. And this will be the result after the last step, that we finish recording the deposit and deduct the fee. We click New, Bank Deposit, and we first change United States dollars to Russian rubles. That gives us the ability to see all of the undeposited funds that are in rubles. Now we have to make sure that both the date and the rate are exactly what they were a moment ago. 0.012 of the US dollar on the day we received the money, January 30th. Now we click the check mark in the left to acknowledge that this is what we are physically depositing into our Chase Bank. And of course, it's going to be converted into the US dollar equivalent before it's deposited. So QuickBooks knows that you're increasing your bank account by 120 US dollars because of the number of units and the rate. Now, you have to subtract out the fee. And the way to do that is to scroll down and under the word account, click for the pull down arrow. And if you did not yet put the expense, transfer fees expense, or you could even call it conversion fees expense, but you do have the ability to add that at the moment you add a transaction. So this is account type, of course, is expense. And in this case, detail type doesn't matter. You can put other business expense if you want, but the name should be either transfer fees expense or conversion fees expense or any expense you had to pay to be able to get the money into your bank account in terms of US dollars. Click Save and Close, and then it will be on the list here. And the amount should be in terms of rubles because you physically deposited rubles, and what they deducted as a fee was in terms of rubles, minus 1,000. And then, of course, you have to push tab. You put it as a negative number so it lowers the overall deposit. So you're depositing 9,000 rubles, but it won't matter because it will be in your U.S. bank account as an increase of $108. So we double check everything. We click Save and Close. And when we go back to the trial balance, the numbers are exactly as what we expected. The undeposited funds is now down to 2,000 even. Chase bank account went up to $2,648, exactly as what we expected, and the amount we paid in terms of US dollars for the transfer or the exchange fee is $12 US.
Chapter 8. Receiving Foreign Currency.
Sometimes we need to receive payment in a foreign currency in order to have certain customers. We therefore must have a bank account that has funds in the currency of the other country. After the administrative tasks necessary to open an account with the other currency, you are then able to receive payments from customers who can only pay in their own home country's currency. When you receive payment from a customer into the foreign currency bank account, the currency has a specific value in US dollars on the day their payment is deposited. QuickBooks will remember the dollar value per unit for each of the units of the currency you receive. This value is from the exchange rate on the day the customer's payment was deposited into your foreign currency bank account. For example, let's imagine on February of 2021, we started doing business with Henry Goodman from Guyana. He pays us in Guyanese dollars, not US dollars. In order to service him, we must agree to receive payment from him in Guyanese dollars. Therefore, we must have an account in the First Bank of Guyana, which is an account in a bank in Guyana, in order to receive payment in Guyanese dollars and possess units of this currency. You can click Accounting in the left margin, Chart of Accounts, or click the cog wheel and click Chart of Accounts. Then, in the top right, click New. Now, obviously, this is a bank type of account, and of course, it is a checking account because it's something that we use when we operate our business, but currency in this account is Guyana dollars, and the name of the bank Bank of Guyana. Save and close. And now we have a bank account that has the ability to accept payment in Guyana dollars. Let's do the example transaction. Let's imagine on February 8th, we did legal services for Henry Goodman for 10,000 Guyanese dollars and made an invoice for him. The Guyana dollar at this moment, February 8th, is worth $0.005. From the top left, click New, Invoice. The date of the invoice is February 8th. The customer is Henry Goodman. Now, the product or service is legal fees earned, and the amount is 10,000 Guyana dollars. Now, QuickBooks thinks that the US dollar equivalent is 47.83, but we're determined to make this at a different rate from what the QuickBooks currency list remembers. So make it 0.005 just for our illustration. Now, we're not changing it in the currency list. We're changing it only for this transaction. So we click OK, and we scroll down, and you can see now QuickBooks Online understands that we're billing this customer for 50 US dollars because that's what these 10,000 Guyana dollars are worth on the day that we create the invoice. When we click Save and Close, and we click Reports, Trial Balance, you can see that accounts receivable Guyana dollar shows up for the first time as $50, and legal fees earned, or income from legal services has increased by $50. Watch, if I double click, I can scroll down and you can see Henry Goodman has an invoice that just increased our income in this account by 50 US dollars. QuickBooks customer records will remember that accounts receivable Guyana has 10,000 units of currency, in this case Guyana dollars, and each was promised to us at the moment that each one was equal to 0.005 of a US dollar. The most important thing to remember is that QuickBooks has this data about each unit of currency somewhere behind the scenes. You cannot check this, but you will see the results of this, and it will confirm that QuickBooks tracks all individual units of currency and what rate they were acquired at. Now, you will see a demonstration of this, and you will see the result. So let's continue with our example. Let's imagine on February 11, we received payment for the Henry Goodman invoice. Now let's imagine on February 11th that we only received 5,000 of the 10,000 Guyanese dollars listed on the invoice. At the moment the money was deposited from Henry into our Guyana dollars bank account on February 11, each Guyana dollar was worth 0.006 US dollars. So what's the gain? Well, the Guyana dollar was 0.005 at the moment we made the invoice, and now at the moment we're getting paid, the Guyana dollar is now worth 0.006. There is an increase per Guyana dollar of 0.001. And since we received 5,000 of the 10,000, that means the gain from this payment that we receive is $5. 5 US dollars worth of Guyana dollars anyway. 5 US dollars is the gain because it's 0.001 of a dollar times 5,000. So what will be the result after receiving the first 5,000 Guyana dollars? Well, we received half of what is owed to us. So accounts receivable Guyana will decrease from 50 to 25. However, we received 30 US dollars worth of Guyana dollars deposited into the bank account. So First Bank of Guyana will show up for the first time with a $30 balance because that is the US dollar equivalent of the 5,000 Guyana dollars we received at the moment the exchange rate was 0.006. And the $5 difference goes to exchange gain or loss. So instead of having a $3.70 debit, adding $5 on the credit side makes a net credit or a net gain of $1.30. These will be the numbers if we properly record this transaction. We click New, Receive Payment. The date was February 11. The customer, Henry Goodman. Now the rate that we received the payment, 0.006 of the US dollar. We do not want to change this rate on the currency list. We only want to change it for this transaction. So we click OK, and we put in the number of Guyana dollars received. And of course, 5,000 are applied to the 10,000 Guyana dollar invoice, and QuickBooks is telling us we just physically received 30 US dollars worth of Guyana dollars. We click Save and Close, and the results are exactly as what we expected. The Bank of Guyana shows up on the trial balance for the first time as $30. The accounts receivable for Guyana dollars is exactly half what it was a moment ago because we received half of the Guyanese dollars that we were promised. And the exchange gain or loss is the result that we expected. Now, to properly learn this, we have to follow through and finish our example. Let's imagine on February 15th, we received payment for the Henry Goodman invoice. We received the remaining 5,000 of the 10,000 Guyanese dollars listed on the invoice. At the moment the money was received from Henry, each Guyana dollar was worth 0.007 US dollars. So what was the gain? Well, the remaining 5,000 Guyana dollars on the open invoice are still valued by our QuickBooks at 0.005 per dollar, because QuickBooks remembers that was the value at the moment the invoice was made. The dollar is now 0.007 Guyana dollars. So the increase per Guyana dollar is 0.002 from the time that we made the invoice and the time we're getting paid these last 5,000. So if you take the increase per unit and multiply by how many units, you get the gain that we're going to have as a result of receiving the balance of the invoice several days later when the Guyana dollar has now increased by 0.002. So what will the result be after we receive payment on February 15th? Well, we received all of the money for the open invoice. So the accounts receivable Guyana should go down to 0. And the amount in US dollars of 5,000 units times 0.007 would mean we received 35 US dollars into our Guyana bank account, making the balance of the Bank of Guyana $65. And the difference between the $35 that increased our bank account and the $25 that was on the invoice is a $10 gain. So the net gain will increase by $10 and become $11.30. And these will be the numbers after receiving the February 15th payment where the Guyana dollar has increased. Let's take a look at how to record it. We again click New, Receive Payment, and of course the date this time is February 15th. The customer is Henry Goodman, and we know we're depositing the money to the Bank of Guyana, and there's 5,000 Guyana dollars remaining. But today, the rate that we're receiving the payment at, 0.007 US dollars, click OK, and we are receiving the remaining 5,000 Guyanese dollars. Of course, we click Save and Close, and the results are exactly as what we expected. Bank of Guyana has increased to $65 because we now have $30 from the first payment and $35 from this payment, and accounts receivable Guyana dollars has become 0 because we are now receiving in the future no Guyana dollars. All 10,000 of those units have been paid, and the exchange gain or loss has increased to $11.30 gain, exactly as what we expected.
Chapter 9. Making a Home Currency Adjustment.
When we report formal financial statements or tax forms, each statement has an official date or date range. The numbers on the statements must be accurate as of the date of the statements. Since currency values change all the time, then you must adjust the value of any foreign-held currency that you own to make it actual value as of the date of the financial statements. In our example, we will follow from the previous video. In our bank account with the Bank of Guyana, we currently have 10,000 Guyanese dollars. Last February 11, we received the first 5,000 Guyana dollars, and at that moment, February 11, they were worth 0.006 of a dollar. Then, a few days later, on February 15th, we received the other 5,000 Guyana dollars, and at that moment, February 15th, we recorded receiving them at 0.007 of a dollar. So what will QuickBooks remember? Well, of course it will remember that the US dollar equivalent of the Guyana dollars that we own is now a balance of $65 as of February 15th. And that's again because 5,000 of those Guyana dollars were acquired at 0.006, and the other 5,000 that's in the bank account were acquired at 0.007. So the first 5,000 are currently worth in US dollars 30, and the other 5,000 that were acquired later on the 15th are worth 35 US dollars, and that explains why at this moment all 10,000 units of the Guyana dollar are equal to 65 US dollars in our records. And we can prove this by opening the trial balance. If you go to the Bank of Guyana and double-click the $65 balance, you will see each of the two transactions that were recorded here in the Bank of Guyana. And when I double-click the first one, you can see that it was recorded at 0.006, and when I double-click the second one, you can see that it was recorded at 0.007. So let's think about our example. Let's imagine that we must report our financial statements on February 17. We did not have any new transactions from February 15, which was the last time we received Guyana dollars, until now, February 17. However, on February 17, right now, each Guyana dollar is now worth 0.008 of a dollar. So we must update the balance of the bank account, the Guyana bank account, to reflect the actual value in US dollars as of the date that we report our financial statements, February 17th of 2021. To do this, we must make a revalue currency adjustment. Now, you may well ask, what is a revalue currency adjustment? Well, it is an entry that we make into our QuickBooks Online records that adjusts for, or let's say corrects for, the change in value of any foreign currency that we own. This is the change in value from the date of the last recorded transaction of that currency until the date of the adjustment, which is usually for financial statement reporting. So what does QuickBooks actually remember in our records? Well, QuickBooks remembers how much each of the individual units of currency and how much they were received at the moment that we acquired them, and that reflects the current balance. QuickBooks will change the value of the individual units in our records to reflect the currently updated value, which means instead of having half of them at 0.006 and half of them at 0.007, after the adjustment, what will happen is all of the units that we own will all become the same value, the new value per unit that we put into QuickBooks, and as a result, the balance of the foreign bank account will change in amount regarding the US dollars. So before we adjust, we have $65 in the Guyana bank account. But when we update the cost or the price of each unit, that means that the value of the whole bank account increases from $65 to 85 US dollars, and that means we have a $15 gain at the moment we adjust the value to make our financial statements correct. So what will be the result when we record this home currency adjustment on March 1? Well, the value of the Bank of Guyana has increased from 65 US dollars to 80 US dollars because of the $15 gain and the increase in the rate per each unit. And of course, because that's a gain, then exchange gain or loss here at the bottom will increase by $15, and we now have a total gain of $26.30. We click the cog wheel and we click currencies. Then in the row of the Guyana dollar, we click the pull down arrow, and we click Revalue Currency. Now don't worry that it's revalued crazy, because it assumes the exchange rate as of the day that you logged in. We're going to put our own. In other words, sometimes you might have a website that's superior to whatever the website that QuickBooks Online is using for the daily exchange rate. Who knows? But we're going to put it in at 008 of a US dollar. Very important, make the date the 17th so that you can make sure that the date matches the time in which the currency was valued at that moment. But look at this. The gain is exactly as what we expected. If we turn them all into valued at 0.008, the total gain will be $15. And we click Revalue and Save. And then you can click Let's Go. We'll go to the trial balance. And you can see the results are exactly as what we expected. The Bank of Guyana is now worth 80 US dollars for the 10,000 units that are in there, and the exchange gain or loss has increased to $26.30. Final note, what else will be the result? Well, QuickBooks now remembers that all 10,000 units of the Guyana dollars we have are now each equal to 0.008, and that's why it's 80 US dollars. So that means when you pay these Guyanese dollars to a vendor in Guyana for some service that you need, QuickBooks will remember there are 10,000 units of the Guyana currency in the account regardless of the US dollar value on the day that you pay.
Chapter 10. Problems with using the multi-currency feature.
So why do we need to make a home currency adjustment before we remove the foreign units from the foreign bank account? Well, although QuickBooks is so great, if you do not make a home currency adjustment before you pay from the account with the other currency, the account balance in dollars will be out of sync with the number of units of currency in the account. Now, what am I talking about? Well, in the prior video, the balance of the Bank of Guyana was worth 65 US dollars. And that's because we had previously acquired 5,000 Guyanese dollars at the rate of 0.006, and then on a later date we acquired another 5,000 Guyanese dollars at the rate of 0.007. Now, the first 5,000 of Guyana dollars were worth 30 US dollars, and the second 5,000 were worth 35 US dollars if you multiply across. And that's the reason why all 10,000 of the Guyana dollars in the bank account are equal to 65 US dollars. Now, in our example, instead of doing a home currency adjustment like we should before we pay, we simply put the $0.008 per Guyana in the exchange rate window when we record the payment. So we put it here instead of making a formal home currency adjustment. So, what happens? Well, QuickBooks will remove all 10,000 of the Guyana dollars, so you will have 0 units of the currency in the account, but they will be removed at the rate of 0.008, not the rate they went in at. The number of Guyana units goes down to 0, and in reality you have a $15 gain like we did in the last video. However, because you did not do a home currency adjustment before you paid, instead of recording the gain, QuickBooks will record a change in the balance of the bank account for the whole amount of the dollar value of the expense that you paid. Now that's the crucial point. Let me say it again. Because you did not do a home currency adjustment before you paid, instead of recording a gain, QuickBooks will record a change in the balance of the bank account for the whole amount of the dollar value of the expense that you paid. So what should QuickBooks record? Well, it should record paying $80 for the expense, and you have a $15 gain at the moment you pay that expense. But what will it record? Instead of a $15 gain, it will instead put the bank balance as minus $15, even though you paid all of the Guyana dollars out of the bank account. For example, let's imagine on February 28, we paid Gina Casina, a vendor in Guyana, 10,000 Guyanese dollars for a delivery. The Guyana dollar was worth 0.008 on the day that we paid. So what should be the result? Well, the Guyana bank balance should only go down to $65 because we only have 65 US dollars worth of Guyana in that account. Okay, it should become zero, and there should be 0 units left in the account. The delivery expense should appear on the trial balance increased by $80 because that's really the value of what you paid for the service at the moment you paid it. Even though you paid 10,000 Guyana dollars, it was worth $80 of delivery at the moment you paid it. And the gain on the exchange of the Guyana dollars should increase by 15 and make it, I think, 26.30 or whatever it was when we did it properly in the prior video. However, what will be the result? Well, the delivery expense or whatever service you pay for must increase by the US dollar value of the service at the moment you paid. And you paid all 10,000 Guyana dollars, and that's why it goes up by $80. You're paying all of the Guyana dollars in the account. But instead of recording the $15 gain, the Guyana bank balance will decrease by the whole $80. And even though there are 0 units left, the balance of the Guyana bank account will unfortunately go down to negative 15, even though it should be 0, because there are 0 units left. It means that the Guyana bank account will be out of sync regarding the value of each unit compared to the balance of the account. Now, if we pay for delivery 80 US dollars or all 10,000 Guyana dollars, what should be the proper result? Well, we paid $80 worth of US dollars worth of delivery, so delivery expense should increase by $80. And we paid all of our Guyana dollars, we paid 10,000, so the balance should go down to 0, and the $15 should increase the gain and bring it up to what it was in the previous video. But unfortunately, it will not. Unfortunately, what's going to happen is that even though delivery expense will increase by 80 as it should, the balance of the Bank of Guyana is going to become negative 15 instead of 0, and it will not include a gain at all. So there are 0 units of currency, but the balance is negative. Watch. So here we are in the trial balance as if we never made the revalue currency adjustment. Now let's record the payment of Guyana dollars for delivery on February 17th. We click New, Expense. The date would be February 17th. The vendor we pay is Gina Casina. Now remember, we're paying from the Guyana dollar bank account. And she gives us delivery service, and the number of Guyana dollars that we are giving Gina is 10,000, and the rate that the Guyana dollar is at the moment we pay is 0.008 of the US dollar. Just click OK, because this is for illustrative purposes. Now watch what happens when we click Save and Close. So when we come back to the trial balance, you can see that delivery expense is correct because it increased by 80 US dollars, because that's what those 10,000 Guyana dollars were worth at the moment we paid for the delivery. But notice, instead of decreasing the gain, what it did was it made the balance of the bank account negative. That $15 should be an exchange gain or loss, increasing the gain. But instead, that $15 is incorrectly recorded in the Bank of Guyana, making it a negative balance. So we have 0 units of Guyana dollars that we own. There are physically no Guyana dollars in the bank account, but the balance in QuickBooks is showing negative 15. So what's the solution? The solution is to delete the transaction, make the home currency adjustment, and record the transaction again. So I deleted the payment that I just recorded, and you can pause the video and delete the payment that if you followed along, and the numbers are back the way they were before the payment. The proper thing is to do the revalue currency before you pay the money out of the foreign bank account. Click the cog wheel, go over to currency. Now you go to the row of the Guyana dollar and click revalue currency. Now remove the check mark here. The date that you are revaluing is February 17th. Remove the check mark. Click custom rate. You have to keep removing the check mark or it won't work for you. Change this to 0.008, and now when the check mark goes on, you see the proper gain or loss. Click revalue and save. You go to the trial balance, and now the numbers are what they need to be before you record the payment. The full gain has already been recorded, and the $15 has been added to exchange gain or loss, and the Bank of Guyana is at the proper balance for February 17th, $80. Now we can make the payment. We click the cog wheel, we click the new menu and we go to check. We make sure that we are paying from the bank account of Guyana. We make sure the rate is exactly what the rate is recorded in the Bank of Guyana in our records as of the appropriate payment date. And we're paying Gina Casina, and we're paying her for delivery expense, and we're paying all of the 10,000 US dollars. We're paying all of the 10,000 Guyana dollars that we have in the bank account. We click Save and Close, yes, and now you see that the proper balance of the bank account of Guyana is 0. The proper amount of delivery expense is 80 US dollars because that was the value of the delivery that we paid, and it increased it to $580.
Chapter 11. Transfers to overseas accounts.
The most common multi-currency transaction type is a transfer of funds at the moment the funds are converted to the other currency. This is because you must put some money into a bank account to open the bank account. So usually the first transaction is a transfer. Sometimes there is a fee and sometimes there is not. For example, let's imagine on February 18, we purchased 5,000 Guyanese dollars at the moment the exchange rate was 0.008 of the US dollar. 40 US dollars will be deducted from your bank account at the moment of the transfer. 5,000 Guyanese dollars will appear as the balance of the account in the Bank of Guyana. $40 will be the balance in our trial balance. So it's very simple. We click New and go over to the column on the right that says Other, and we click Transfer. Now, the date of the transfer is February 18. And let's imagine we're transferring from Chase Bank US to the Bank of Guyana. Now, the day that we make the transfer, the exchange rate is 0.008. So what are we transferring? The amount? Now, notice the amount that we put will be in terms of the Guyanese dollar, in terms of the foreign currency whose bank account we are transferring to. That's 5,000 US dollars transferred on February 18. Now when we click Save and Close, or just close it, you can see when we click Reports, Trial Balance, Bank of Guyana is worth 40 US dollars and Chase Bank decreased to $2,608. Second example, let's imagine on February 19, we purchased 5,000 Guyanese dollars at the moment the exchange rate was 0.009 of the US dollar. 45 US dollars will be deducted from your US bank account at the moment of the transfer. 5,000 Guyana dollars will increase the balance of the account in the Bank of Guyana, making 10,000 Guyanese dollars in the account, and now the account is worth $85. However, this time there is a fee to convert the currency and transfer it to the Guyana bank account. The fee is always recorded in terms of the currency of the account that you are transferring to. It is easy to find the amount of the fee because it will be clearly deducted from the account after the transfer. And you can use the checks window to record the fee, or in the case of QuickBooks Online, you could also use the expense window, and you would record the fee as a separate transaction. So, in our second example, let's imagine this transaction, but during this transaction, they also deducted 200 Guyana dollars for the transfer. Now, you have to record the fee in a separate transaction. So let's ask ourselves, what will be the result before recording the fee? Well, the Bank of Guyana increases by $45 to become $85, and Chase Bank decreases by 45 US dollars and becomes $2,563. So that'll be the result before we record the fee. Again, we click New, Transfer, put the date February 19th. We're transferring from Chase Bank to the Bank of Guyana. The exchange rate on the day of transfer is 0.009 this time. And we're transferring 5,000 Guyana dollars at 0.009, making 45 US dollars as the US dollar equivalent of the amount of this transaction. Now, when you click Save and Close, you can see the results in the trial balance are exactly as what we expected. Bank of Guyana became $85, and the Chase Bank account decreased to $2,563. So what will be the result after we now go back and record the fee? Well, 200 Guyana dollars is worth $1.80. So that means that $1.80 will decrease the Bank of Guyana, and the balance in the Bank of Guyana in terms of US dollars will be $83.20. And the fees, transfer and exchange fees, you see that down here, goes from $12 to $13.80. And to do this, we will use the checks or expenses window. New, expense. Make sure that the date is the same date as the transfer or the exchange. Make sure that the rate is the same as what you recorded a moment ago. And the account that the money is coming from is the Bank of Guyana. And the expense, there's no payee in this case, or you could put the Bank of Guyana also on your vendor list as a payee, but a payee is not required. And you can just put the transfer and exchange fees, transfer fees expense. And again, in terms of Guyana dollars, they deducted 200 Guyana dollars out of the Guyana bank account. Save and close, and the results are exactly as what we expected. When we open the trial balance, you can see Bank of Guyana has decreased to $83.20, and transfer fees expense has increased to $13.80. Now, you now have in the Bank of Guyana 5,000 at 0.008, and you have another 5,000 of Guyana dollars at 0.009. So your Bank of Guyana has currency that's valued differently in the account right now. You must do a home currency adjustment before transferring the money out of the account. If you forget, then your records will not be correct and your currency units will be out of sync with the balances of the account, just like we learned in the prior video. So I think you should take a look at the video for home currency adjustment if you don't remember the reason why you must make an adjustment before transferring the money out or paying the money out. Let's make the adjustment as of March 11th, the very next day. And let's make them all equal to 0.009 so that on the day that we transfer out, we don't have a problem. And the amount of home currency adjustment gain should be $5 because it's only 0.001 times the 5,000 that went in at 0.009. So let's go ahead and adjust it. Now, what will be the results? Well, the Bank of Guyana will increase by $5 because 5,000 out of the 10,000 units are increasing by 0.001. And the $5 actually increases down here. Did you see that? It increases the exchange gain or loss to be $5 more gain. Again, to adjust, we click the cog wheel and we go to the column of lists and we click currencies. We go to the row of the Guyana dollar and we click the pull down arrow and click Revalue currency. Now, the date will not be March 11th. Let's make the date March 20th, just to be sure that it is at least one day after the last transaction, so that there is a logical reason to adjust. Now, this window is very temperamental, so let's unclick this to put in the rate that we know it should be, and then change you have to keep unchecking this, so you're going to get a wrong number. So change this to 0.009, push tab, and now you have the correct amount of gain or loss, a $5 gain. Click Revalue and Save. Let's go. Trial balance. And now you can see the numbers are exactly as what you would expect. The Bank of Guyana changed to 88.20, and the exchange gain or loss became $31.30.
Chapter 12. Unrealized gains and losses.
An unrealized gain or loss is a gain or loss that you do have but did not record as an entry or adjustment into your QuickBooks records. A realized gain is a gain that you did record into your QuickBooks records. So a realized gain or loss is a gain or loss from the changing exchange rates of the other currency, and it occurs when you either record receiving, depositing, or transferring money to an account of the foreign currency with a different rate from the rate that you actually acquired the currency from. Or a realized gain could be recorded in your records from making a home currency adjustment. And we have already experienced both of these. So in the case of a realized gain, each realized gain or loss is recorded as an adjusting journal entry to the account called Exchange Gain or Loss. Opening the account Exchange Gain or Loss will show you each entry, that means each transaction or each adjustment that caused an exchange gain or loss in your records. Since this account does not show you the exchange rate of each transaction, it might be better to open the report called Realized Gains and Losses. Now, before we open the unrealized gain or loss report, let's open the account called Exchange Gain or Loss and double-click. And this account recorded every exchange gain or loss that we realized, every one that we recorded in our records. And you can see the last two have been recorded as journal entries because we made the home currency adjustment when we clicked Revalue Currency from the currency list in the two prior videos. So if we double click a payment that's in this exchange gain or loss, we'll see a prior transaction showing the amount of gain or loss, or showing the amount anyway. But if we double click the adjustments that we made from the currency list to revalue the currency, we would get the journal entry that affected the accounts for those two prior adjustments we made from the currency list in the two previous videos that we just saw. So that explains why the amount of gain or loss, in this case a $31.30 gain, is really the result. You see, the QuickBooks report for unrealized gains, the QuickBooks report for realized gains is different from the desktop report. The QuickBooks desktop version would show all of the gains and losses that have been recorded, including the revaluing the currency journal entries that we made, one of each in the two prior videos. But you will see that unfortunately, if you click Reports and you click Standard and you slowly go down to Realized Gains and Losses, Realized Exchange Gains and Losses, even if you choose All Dates and Run Report, it will only show you the transactions where the gain or the loss was recorded, and it will not show you the journal entries. And that explains why the total here is not the same as the total in the account that shows exchange gains or losses. So this is a little bit different from the QuickBooks desktop version. The QuickBooks desktop version would have this report, including the other two journal entries that you saw a moment ago. An unrealized gain or loss from the changing exchange rates of the other currency occurs every day. Each day, the exchange rate of all currencies change. Therefore, the values of any foreign currency you own changes every day and creates a gain or loss. If you did not adjust the rate with a transaction or a home currency adjustment, then the gain or loss for that day is unrealized and did not yet affect your QuickBooks records. So imagine the day you transferred money into a Guyanese bank account. Imagine you transferred 10,000 Guyana dollars. And imagine at the moment you transferred, those 10,000 Guyana dollars were worth 80 US dollars. But if you did not have a transaction or make an adjustment between the day of the transfer and the day that you're reporting the financial statements, then you did not account for the fact that on the day that you're making the financial statements, the 10,000 Guyana dollars are now worth 90 US dollars. Because the date that you run the statement was different than the date that you transferred the funds. So if you do not record a home currency adjustment before recording your financial statements, you will have an unrealized gain or loss for the change in the currency exchange rate between the last transaction and the date of the report. In this example, $10 is the realized gain, and it's the amount of the gain at the moment that you ran the financial statements. So now let's see our example. The last transaction, or at least the last adjustment, was February 20 of 2021. We now have 9,800 Guyana dollars at 0.009 in our records, equaling $88.20 stated in terms of US dollars. Let's imagine the next day, February 21, each Guyana dollar suddenly is only worth 0.008 US dollars. Your unrealized loss would be just the difference, which is 0.001, the difference in the unit value, times the 9,800 that you actually have. Therefore, your unrealized loss on February 21 is $9.80. So if you ran financial statements, you would have to include that unrealized loss if this were the date you needed to report your financial statements. So how do you do it? Well, you click Reports, Standard, scroll down slowly to get the Unrealized Exchange Gains and Losses report. Double click. Now you are required to both put in a date as of the report so that they know what exactly the gain or loss is as of a specific date, and for each of the active currencies. Now we currently don't possess, or it's not in our records, any of the other currencies except the Guyana dollar, and we're going to change it to the rate in the example. And when we click Continue, you can see that the unrealized gain and loss is exactly as what we expected, $9.80. And this report is a separate additional report that you would add on and include when you submit your balance sheet and your profit and loss.
Chapter 13. Credit card transactions with foreign currency.
Just like home currency credit card accounts, foreign credit card accounts are exactly the same when you record transactions in QuickBooks, except you will have a realized gain or loss for the difference in currency value between the date of the charges and the date of the payments. You therefore must make a home currency adjustment right before each credit card payment or credit card credit. For example, let's imagine on February 20, we opened a credit account with Bank of Guyana with a credit limit of 150,000 Guyanese dollars. Well, then we would have to add that account to our chart of accounts. Click Accounting, Chart of Accounts, and then you would click New. Now the type of account is credit card, and there is only one detail type, and the name of it will be Credit Card Bank of Guyana. And as soon as you save it, you must remember to make the currency of that credit card the Guyana dollar. Notice the active currencies are up top here and easy to find. Click Guyana dollar and then click Save and Close. Exchange rate is not necessary. You're only creating the account. Now, let's imagine on February 21, we charged Gina Casina for delivery 9,800 Guyana dollars. Well, at the moment you charge, the Guyana dollar was worth only 0.008 of the dollar back on February 21 of 2021. So what will be the result? Well, the delivery expense, Guyana credit card. Now the interesting stuff happens when we actually go to pay the balance of the credit card. On February 22nd, we pay all of the 9,800 Guyana dollars to remove the balance of what was owed to the Bank of Guyana credit card. On February 22nd, the Guyana dollar was 0.007 of the US dollar. You must make a home currency adjustment or revalue the currency from the currency list, as it were, before you pay your account balances, or the balances will be out of sync in the way that we described in the prior videos. So you must adjust two accounts. And you may well ask, why do we have to adjust two accounts? Well, that's because our Guyana bank account is holding $9,800 in Guyana dollars that were previously worth 0.009 at the moment that we either adjusted or had our last transaction. And that's why the US dollar balance shows $88.20. But you see, on the day that we're paying the credit card, those same 9,800 Guyana dollars are only worth 0.007. So our bank account is only worth $68.60. What that means is we actually lost $19.60 from our bank account of Guyana at the moment we pay, because the exchange rate was lower from the day that we actually adjusted or acquired the Guyana dollars. But you see, we also have Guyana dollars in the credit card balance listed in our QuickBooks records. And on the day we charged those Guyana dollars, the dollar was worth 0.008. And that means those very same $9,800 that are in the credit card records were only recorded at 0.008, and the Guyana dollars in the credit card were valued at $78.40 when we charged. Now, on the day that we pay, they're only worth 0.007. So that means that same 9,800 that we owe in Guyana dollars is now only worth $68.60. And guess what? You actually gained $9.80 between the date that you charged and the date that you're going to pay. Now, you may well ask, why is this a gain if the amount decreased? Well, it's very simple. You originally owed $78.40 in US dollars on the day that you charged. But on the day that you pay, you don't owe 78 US dollars. On the date that you pay, you only owe 68 US dollars because of the decrease in the exchange rate. So that's why in the case of the credit card, you gained $9.80, even though your bank account lost $19.60. So what was the net loss? Well, if you lost $19.60 on one account, but you gained $9.80 in the other account, then the net loss, which will be the net adjustment, home currency adjustment, on March 31st, before we record paying, will be $9.80. And after we pay, both accounts should be equal because they will have the same number of units and each of those units will be valued in the same amount. To revalue the currency, we click the cog wheel and we click Currency. We go to the row of Guyana dollar and we click Revalue Currency. Now the date is very important. It must be the date that you're revaluing, and you're going to put in the custom rate because this is only for illustration purposes. Push tab. Now you notice both of the gains and losses are listed here. For the credit card, to revalue everything to 0.007 would mean a $9.80 gain because we owe $9.80 less because the value of the Guyana dollar decreased after the charge. But on the other hand, the value of the dollars in our Guyana bank account that we are holding has decreased by $19.60. So the net gain or loss is exactly what we mentioned a moment ago. We click Revalue and Save, and you can see from your trial balance that the exchange gain or loss has been updated before the payment, and the balance of the Guyana bank account is now equal to the balance of the Guyana credit card. So what does that mean? It means we owe 9,800 Guyana dollars and we pay 9,800 Guyana dollars. And the balance of both Guyanese dollar accounts, bank and credit card alike, should be zero. So we click New. Now to pay the credit card, you can click Expense, Check, or Credit Card Credit. I'll just click Expense. And if you click Expense, the way to do it here is the money is coming from the Bank of Guyana bank account and it's going to the Bank of Guyana credit card account, which is down here. Boom. Money is coming from the Guyana bank account to the Guyana credit card account. You must be careful to put the exchange rate that you had adjusted it to, and make sure you put the correct payment date, and the amount of Guyana dollars wipes out both balances. Save and close, and the balance of the Guyana dollar bank account and Guyana dollar credit card account both finish with 0.
Chapter 14. Accounts Payable Currency Transaction.
The Accounts Payable feature in QuickBooks is only necessary when you owe money directly to the vendors who perform services for you. Usually, you need to continuously owe them for more than 1 month's worth of service or bills in order to benefit from using the Enter Bills, Pay Bills window in the Accounts Payable feature in QuickBooks. So why is this an accounts payable issue? Well, that's because on the day you receive the service from the vendor, the dollar amount of the currency you owe is based on the exchange rate on the day of service or product delivery. and that should be the date of the bill. So let's imagine that you got a bill for 10,000 Guyana dollars, and on that day, that bill and those 10,000 were worth 80 US dollars. Now let's imagine on the day you go to pay the vendor's bill, the value of that same currency is different because exchange rates change every day. Well, in a case like that, you would have a gain or loss on the exchange at the moment you use the pay bills window to pay the bill to the international vendor. For example, let's imagine on April 2nd, you received delivery service from Gina Casina and a bill for the service in the amount of 10,000 Guyanese dollars, and it was bill number 8472. The Guyana dollar was worth only 0.008 US dollars at the moment we received the service and the bill. So what will be the result? Well, we know that accounts payable Guyana dollars will show up for the first time as 80 US dollars because that's 0.008 of 10,000. So the equivalent of US dollars that you owe will be $80 for the service you received. And because you owed $80, that means you received a service worth $80. And because it was delivery service that you received, delivery expense will increase by 80 US dollars and become $738.40. From the top left, we click New, go to the column of vendors, and click Bill. Now the date is April 2nd, and the vendor is Gina Casina. The Guyanese dollar was worth 0.008 US dollars at the moment we received the service and therefore entered the bill. And the bill is delivery expense. So we put in the amount of the bill in terms of Guyana dollars, Guyanese dollars, and that's all you have to do to record it. It's the same like recording anything else, and it gives you the appropriate totals in the bottom right. Now click Save and Close, and when we click Reports, Trial Balance, you can see the results are exactly as what we expected. We owe the equivalent of 80 US dollars to Gina Casina in the new accounts payable for Guyana dollar, and our delivery expense increased to $738.40. And let's imagine on April 8th, we transferred in enough money from the Chase bank account to the Guyana bank account to be able to pay the whole bill from Gina Casina. On April 8th, the Guyana dollar was worth only 0.007 of the US dollar. So, to make sure that we transfer 10,000 Guyana dollars, we deposited and transferred 70 US dollars into our Guyana bank account, and that became 10,000 Guyana dollars that we will then pay from. So what will be the result just after transferring the money? Well, the Bank of Guyana increases to 70 US dollars because that's what the 10,000 Guyana dollars were worth at the moment we transferred it. And if 70 US dollars transferred to the Guyana bank, that means the Chase bank account here in America decreased by $70 and becomes $2,493 at the moment we transfer the 10,000 units of currency at 0.007. So these will be the results after the transfer on April 8th. From the top left, click New, go over to Other, and click Transfer. The date of the transfer is April 8, and we're transferring from the Chase Bank in US to the Bank of Guyana, and the rate of exchange or conversion on that date is 0.007, and the amount in terms of Guyana dollars, in terms of the account we're transferring to, 10,000. So we're transferring the equivalent of 70 US dollars because it's 10,000 Guyana dollars at 0.007. When we click Save and Close, the results, when we click Reports, Trial Balance, are exactly as what we expected. Bank of Guyana now has a balance of $70, and our Chase Bank decreased to $2,493. Now let's continue the example, and on the same day, April 8, we actually pay Gina the 10,000 Guyanese dollars that we owe her. So at the moment we pay, on the same day of the transfer, what is the gain? Well, we originally owed 80 US dollars because that was what it was worth when we got the bill. But at the moment we pay, we only owe 70 US dollars because the 10,000 Guyana dollars that we owe are now only worth 70 US dollars. So the decrease per Guyana dollar is 0.001, and that means that when we go to pay this bill, we will have a gain of 10 US dollars because we actually owe $10 less from the moment we owed the money till the moment we paid as a result of the exchange gain. So what will be the result after we pay? Well, both the Bank of Guyana and Accounts Payable Guyana should both become zero. Bank of Guyana becomes zero because we gave all 10,000 units to Gina. And Accounts Payable Guyana should become zero because we gave all 10,000 units to Gina. But we had a $10 gain, which will increase our net gain or loss on exchange, and it will become $31.50. Let's go ahead and pay the bill. From the top left, we click New, Pay Bills. Now it may look like you don't have any bills to pay, but if you change the currency from dollar to Guyana dollar, you can see that this is the bill that we entered a moment ago. Now we put the pay date, which is April 8th, and you have to click the check mark if you're paying the entire bill. So the money is coming from the Bank of Guyana, and you're paying the entire bill, all 10,000 Guyana dollars. But now, this is a slight problem. Do you see this? I have a problem right here, and then let's see if we can work together to solve it. You see, this is kind of weird. My QuickBooks Online might not be working correctly today because there's no place on the screen to input the exchange rate at the moment of the bill payment. If I look very closely at each of the different fields in the entire window, maybe if I max it out, nope, scroll down, right, move this to the over to that, nothing. I don't see a field where I can enter the exchange rate, you see. So what I'm going to have to do instead is save it with the wrong number, and you'll get all kinds of crazy results, but then reopen it, and when you reopen the bill payment, or at least when I reopen the bill payment, there's a little box there for me to put in the exchange rate, and that will fix everything. Thank you so much for making it all the way to the end of this QuickBooks Online multi-currency video. I want you to know I have a video for anything else you could possibly need in QuickBooks or QuickBooks Online. So please remember to keep in touch using the comment sections below, And please remember to click like after watching each one to help support the free channel for everyone. I hope you will subscribe and please stay in touch.